Hi everyone and welcome to Trader Talk Radio for today, the 11th of September 2022. My name is Paul Botterill. I'm the founder of Access to Wealth, and joining me today we're going to have Alexis coming in and talking fundamentals, Lloyd in doing currency strength, and we're going to have Gordon coming in with a market overview as well. So lots coming in the next sort of 20 minutes, so do hang in, watch the stream, and if you're watching the recordings, watch all parts. It's going to be good stuff. Now we are starting off today with Alexis on fundamentals. Is that right? Alexis on fundamentals. Hi, Alexis. No.
Hi. Yeah, it's me first, so I'll just get started straight away. Okay, so no problem. So coincidentally, probably we're going to look at the pound a little bit, but I guess not so much about the passing of the Queen, even though I think it's a change of an era. But more importantly, this is the news that actually I think caught my attention from a fundamental perspective. So Liz Truss is the new leader coming in to the UK, which is kind of good news. Supposed to give a bit of stability to the pound, but she unveils a 150 billion UK energy plan. And what this means is, the UK is injecting a huge chunk of money into the market to kind of help the households support the cost of energy, right? So typically, a typical household in UK pays about £2,500 a year for the energy bill, and what this means is they're going to use a chunk of this money to subsidize. So vulnerable UK households will start receiving about £1,200 of support, in installments over the year. And for those households that are not on like gas and electricity contracts, for example, they're also planning to kind of help these people, fund the their gas bills. So what we're looking at a injection of funds from somewhere coming into the UK, and it is in a way of increasing its liquidity of the pounds in the market. So while if we look at just have a quick look at the pound index, while I know it's very difficult to trade at such low levels of the pound, but based on its numbers and the situation, I also find it very difficult to buy the pound currently based on inflation. It's very high inflation numbers. GDP wise, it's not exactly doing very fantastically as well. So this is a little bit of a review over here. So this is a bit of comparison. So inflation is 10.10 as of the last reading. We are expecting a new reading pretty soon. It's got negative inflation. Its interest rates, it hasn't quite gone up yet. Now, the euro, I think what is interesting is the Canada has increased its interest rates to 3.25. Euro has made a big jump, increased its interest rates all the way to 1.25%. So I think in the interest of controlling inflation, the countries are starting to be a bit more aggressive towards it. But on the UK stance, I do expect them to revisit the interest rate one more time, in view that, its counterparts are also increasing. But what is more concerning to me, I guess, would be this 150 billion UK energy plan, because this injection of money, as always, injection of liquidity into any currency market will kind of increase the supply in a sense, and it will kind of drag down the pound on a whole. So two things that are not favorable for the pound is the expected injection of liquidity, and number two, its inflation statistics are still the highest comparatively across the economies. So while from a technical perspective, it is a bit hard to stomach continuing shorting the pound at this end. I don't see any aggressive buying of the pound coming in as a potential. I do feel that on a technical perspective, we will see a little bit of support over here. I think this is a weekly time frame for the currency index. You can see a little bit of support coming into this, but I will be more inclined to look for more potential shorts. But just be a little bit patient and wait for the retracements. So if we do revisit the rest of the pound pairs, I think the pound pairs I'm looking at, pound cat will be one. Okay, pound cat has a very nice run for the last 2-3 weeks. For those of you who are on the Sunday night show with me, we have been writing this down. I think it is a weak this week is to be a little bit cautious, wait for those retracements before we continue shorting. Pound Swiss will be another pair that I will be interested in looking, all right, because the Swiss statistics, is still pretty good. The Swiss still has a positive GDP. Its interest rate is one of the lowest. It's still minus 0.25%. It's got low unemployment at 2%, controlled inflation at 3.5%. So I think the Swiss as a currency is still holding steady. And if we look at the Swiss as a risk-off currency as well, it will mean that the Swiss does have some demand or strength in its potential move. So definitely looking for more opportunities on the pound Swiss. It might be a little bit overextended. Again, overextension just means we just need to be a bit patient, wait for those pullbacks before we continue on its journey. So until there's a bit more clarity coming out from the UK, I still see a potential softness in the UK market despite the technical overextension. So I think my fundamental view for next week is looking for potential re-entries into the short pound. The Canadian dollar and the Swiss would still be my number 2 picks of a upside in terms of upside movements. I think Canadian dollar a little bit more interesting is we are coming into the Q3 of the winter months. There is a lot of potential for oil prices to slowly start moving up because we are entering the winter months. The war between Ukraine and Russia it's not quite over yet. And the more interesting thing would be that I think this would be a couple of warning signals coming out. All right, this is published September 9th. So there are talks about Euro trying to cap the energy prices on Russian side, which is not, they're not too pleased about it. So I do feel there is going to be a potential increase in energy prices even more, if these sanctions still continue. So I think the new talk of the town this season will be energy. We have the UK unleashing a 40 billion package in energy support. We have Europe trying to cap energy prices on Russia, and I think on top of that, I think Russia also kind of shut down its Nord Stream pipeline. All right, on the pretext they need to do some maintenance on it, but I think it's in response or in retaliation to all this so-called price war is going up. So as usual, the sensitivity of the commodity price currencies would be the Canadian dollar, followed closely by Australia and the Kiwi. So we will see a little bit of move over that for the next couple of weeks, because I think the war is starting on the energy oil side, and the oil prices has come off quite a little bit. So we're going to look at over here. Oil prices has come up a little bit, and if you guys notice, this price point, all right, is finding a little bit of support to the pre-war period. So this blue line I have here, February 24th, is where the start of the Ukraine-Russia war, right? So we had this whole price fluctuations, and it has come down almost on par to the pre-Ukraine-Russia period. So I feel that this will be a very good point for oil to start finding its footing again, and we will see a little bit more strength coming up once this support level is kind of played out. So that's my take for the next week, is an eye on the Canadian and commodity currencies, Canadian, Australia, New Zealand, and the weakness in the pound. I mean, unfortunately, the pound still has the weakest statistics among the whole bunch, and I think my favorite will be the Swiss at the moment, based off its risk-off currency status, as well as its general statistics still look pretty healthy. And that's all for me this week. Over to you, Paul.
Cheers, Alexis. Thank you. Good. Julian is going to be... Julian, who works in energy, is going to be busy, isn't he? That's going to be a busy sector this year if it keeps going like that, right?
Yes.
Do you know the UK energy package, Alexis? Do you know if it's just capping power bills? Is that also setting up some some homegrown power sources that aren't reliant on overseas power?
I mean, technically speaking, the UK's imports doesn't really they don't really import that much energy from Russia. But because world prices, when they increase, that's the reason in the first place for the increase in prices. So actually, UK only relies about 3% from Russia itself. But because of market prices in general, I think it's a business world. That's the main reason why prices has increased for that. Yeah.
All the in the UK homes, you have a lot of radiator heating and not much heat pumps.
Yeah.
because it's cold, not warm. So I'm interested to see if we see a move towards heat pumps and more efficient heating, and whether the UK decides to see if they can grow some of their own electricity, in the next 5 or 10 years. It seems having more power can't be a bad thing for any country. I know New Zealand's got to look at doing something similar.
Yeah.
Thanks for that, Lexi. So we're looking to be patient and pick our moments. We're looking for pounds short.
Yep, definitely.
Rightio, thank you very much for that. Right, Lloyd, currency strength analysis. So you